Are you looking to buy your first house or flat in the UK on mortgage and you have no idea that what are the steps involved or how you're going to begin basically, then this video is for you because I'm going to explain what are the key steps involved in this whole process. And obviously, it is quite complicated process. Maybe it might take 7 to 8 months as well. So if you're interested to know what are those steps, please watch this video. I'm Innocent here, and welcome to my Facebook page and YouTube channel. If you are from the UK and you're the UK citizen, then obviously, getting a house on mortgage might not be difficult for you. But if you're from India, Pakistan, Bangladesh, or you just lived in the UK for 2 to 3 years and you're thinking to get your property on the mortgage, then obviously this video is for you, because obviously I'm going to explain specifically what sort of criteria you have to meet basically in order to get your house or your first house in the UK. Now, anyone who has come to the UK, they might be aware that you spend a lot of money on rent. For example, I would say 60 to 70% or maybe 80% money of your salary basically goes into rent. One bedroom flat in the UK can cost as high as £1,600, specifically in London I'm talking about. And obviously, if you have got 2 bedroom flat or 3 bedroom flat, for example, the prices are very, very high. And if the couples are working together, like both husband and wife, for example, they put substantial amount of money in basically housing. Maybe the combined household income might be 60% actually goes into the rent, and obviously then you have to pay for council tax, utility bills, and all those kind of things. So many people then start thinking about that, why not we get a house on mortgage? Because the rent is something that you keep paying on, and after maybe 10 years or 15 years you're still on the rent, and you don't own anything. But if you are on the mortgage, for example, then the amount of money that you're paying, obviously it is going to build an asset for you. It might build a house for you in future. So many people consider this option, and in this video today I'm going to explain in details that what are the steps involved and what are the things you have to do to get your things on mortgage. Now, the first step is actually to look a property on basically on Rightmove or Zoopla. And also, obviously, in this step, you also need to define your budget. Now, how you're going to budget, basically, the general rule of thumb is that if your earning is, let's say, £50,000 annually, then you can take a loan of up to 4.5 times your salary. So roughly, if your combined household income, whoever is working in that house, is around, let's say, £50,000 a year, then you can take roughly a loan of 220,000 from the bank basically. So this is the criteria. Now, if you look at the Rightmove or Zoopla, and if you want to look a property in London, like the 1 bedroom flat, for example, some of the flats can cost you as high as 400,000 or 450,000, because the cost of housing is very, very high. So in this video I will not be emphasizing, or my focus point is not on the house pricing, but my main topic for this video is actually how to get things into the get into the mortgage. What are the steps basically? So I'm not thinking about how much money you're earning, but my main focus would be the steps that you need to know. So the first step is actually the budgeting, for example, and the budgeting is basically based on your household income, and you should have a proof for that as well. You should be in that job for at least 6 months, for example, and only then obviously you should be considered thinking about it. So this is the very, very first step. So let's imagine that you get a property and you like a property and you found it on Zoopla or Rightmove. Let's say it is 220,000, right? So what would be the second step? The second step actually to talk to a mortgage advisor, and you need to get a lender, a building society or a bank, which will actually give you the loan for that mortgage. So that is the second step, and you need to get what we call AIP, which is agreement in principle, which is a statement given from the bank society or a bank, which will basically say that the bank or building society is willing to pay for this mortgage, because without this document you cannot proceed. So that is the second step. So for example, if you you have budget in your mind, so what you need to do, you just need to put look at any property that you might like or might not like, but that is a starting point. And you said that this is around, like on Rightmove, on Zoopla it said that it is £220,000. So you will actually send the picture of those properties and that link to a mortgage advisor. So there are so many mortgage advisors in the UK, and they work very similarly. You just need to find a right one. On the Google, you'll be able to find so many mortgage advisors. So you can actually contact them and say that you want to get a house or a flat on mortgage, and these are the details, and then they will ask you about some documentation. They will ask you about your NI, they will ask you about your bank statements and all those kind of things, your earning and all those kind of stuff. So that is the second step, and that mortgage advisor obviously is going to charge you some fee, but not at the beginning. But the rule is, once your deal is done, once you have looked into the property and all of the parties agrees that you basically you're buying that property, only then that mortgage advisor is going to charge you. So you don't need to pay anything upfront. But when the bank actually agrees, and then you look for an actual right property for you, then obviously you will be paying the money to the mortgage advisor. That is the second step. So once you submit all the documents to your mortgage advisor, what is going to happen, the person is going to actually look into your conditions and all that, and he is going to find a suitable bank or suitable building society. Now there's one condition that you need to make sure that you have got. So if you are a UK citizen, then you need to pay at least 5%, or some banks ask for 10% of the property value. So for example, that is called initial deposit basically. So let's say if the property value is 220,000, so the 10% is basically 22,000 pounds that they ask you to deposit. In some cases, some bank societies ask for 5% deposit, which is around 11,000 pounds. So if you have that money, obviously then you can proceed. But in the case of anyone who is on skilled work visa, like me, for example, or anyone, they have lived in the UK and they are not the UK citizens, the criteria changes. Most of the building societies or banks, they say that the person should have lived in the UK for at least 3 years. So that is a condition that is it is very difficult for most of the people, even if it is possible for some of them. The second condition, that the amount of deposit is very, very high. Some bank or some mortgage providers, building societies, or all those what we call high street banks, they ask for a deposit of 35%. That is very, very big amount of money that basically they ask you for the initial deposit. And I believe it is unfair, but obviously the system is for the citizens, and it is not for anyone who can actually come and buy the house in the UK. So they want to make it stricter as well, and also they don't want that everybody come here and buy a house and the prices of houses skyrocketed. They don't want that. So this is one condition that you have to meet. So basically, if you are from India, Pakistan, or Bangladesh, and if you have lived in the UK for, let's say, 3 years time, then the second criteria that need to basically meet is basically having that deposit ready, which is very, very high, 35%. So roughly, if you have got 220,000 pound property, the deposit they might ask you might be 75,000 pounds basically. Like, you can just calculate 35% of the property value that you've looked for, and you have to have that deposit ready. And again, the mortgage advisor will be asking you for the proof of fund. If is that your money that you've earned, and what is the source of that money? You have to send all those proofs, your bank slips, for example, your pay slips, bank statements, and all those kind of things. Basically, this money should not be a gift from anyone, because generally the bank and building societies don't accept gift. For example, if your parents have given you that much money to actually buy a property, generally they decline that application. So that is the second thing. Obviously, in the second step, you basically need to see the mortgage advisor, give them all the documents. It can happen online as well. And then, for example, let's imagine the best scenario, that you've got 35% deposit ready, you've got your pay slips and everything. Then the mortgage advisor is going to basically get an AIP for you, which is called Agreement in Principle, which is a letter from a building society, which is going to say that, okay, this bank is basically allow and going to give you the amount of money that you're asking for your mortgage, right? Now, so as I said, in the first step, that they are going to pay 4.5 times the household income basically. So in that case, if you are looking for a property of, let's say, 290,000, for example, and you have a deposit of, let's say, 70,000 or 75,000, like 35% of that value, so the remaining amount should be 4.5% of 4.5 times of your household income. This is a point that I want to make clear. So for example, let's keep things very simple. So let's say a property value is 300,000 basically, and you have paid, let's say, 35%. So roughly that would be about 100,000. So the remaining amount is 200,000 basically. And if your household income is 50,000, then obviously the bank will be able to lend approximately 200,000 to your name. And obviously you've got 100,000 deposit. So you can have that property, or you can actually apply for the property, which is basically 300,000 pounds. So this is how it actually works. So the second step is very, very important, to get an AIP, which is called agreement in principle. Now, what is the third step? The third step is actually look for the actual property that you want to buy, because obviously it can happen that the property that you have seen, when you went to visit that property, it might not be good or might not be suitable. So you need to look for that price range property anywhere that you want basically, and you can basically look for 2 or 3 or 4 different properties and different things that you need to consider while you're buying property. One thing that is very important is the basically ground rent, because some properties are very cheap, but their ground rent is very, very high. They might ask you that the ground rent is maybe 5,000 or 6,000 pounds per annum. And also you also need to think about the service charges. Remember, the service charges are separate than the council tax. So there are many flats in the UK, so some of the flats can have a service charges of as high as 5,000 pounds per annum. So that is a lot of money that you have to pay basically on monthly or quarterly basis for the ground rent and also for the service charges. So ideally you should look for a property which should have a 0 ground rent and 0 service charges, which is very, very difficult to find. But obviously you can think about, or you can basically think about, maybe if 1,000 pound ground rent per annum may be a fair deal, or maybe 1,000 pounds service charges per annum is also like a fair deal, like that will translate to 200 pounds additional on monthly basis. So that is the third thing you need to look at. Basically you will go to websites, the Rightmove, for example, or Zoopla, and going to find a property that actually meets your requirement. And once you see that property, then you're going to go to the estate agent who actually dealing with that property, and you're going to say that you've got AIP. They're going to ask you whether you've got AIP or not. That is called agreement in principle. So you're going to show that you've got AIP ready and you are interested in that property. And then obviously if you like that property, then the whole purchasing process of basically is actually going to start. So that is the third step, to actually look for the actual property that you want, and meeting with the estate agent. They're going to show and they're going to ask you to view the property. And once you finalize that property, then they will ask you for further documentation, and then they will be able to give you a memorandum of sale, which actually says that you are willing to buy this property. And then what is going to happen, that is step number 4. That is basically you need to hire solicitors. Basically in the UK, what happens is that you do not need to pay anything to the owner of the property, but it happens through the solicitors. So the cost of solicitors actually depends. For a property, the cost may vary from 3,000 pounds to 5,000 pounds. Basically they look after all the documentation, whether the property is legit or not, is there any issues and all those kind of things. They will also see because obviously when you are buying property on mortgage, there'll be a representative from the bank as well. They're going to visit the property and going to see the condition. Obviously they're going to pay a lot of money for the property you're purchasing, so they want to make sure the property you're buying is right or not. So there are so many people involved, and here a lot of time will be consumed, because the solicitors from the owner, which is the landlord who is selling the property, and you are becoming a new homeowner, you are getting the property in the mortgage. So these two solicitors are going to exchange documents with each other, and you'll be kept in the loop as well. So this is how the whole process works, and this might take 3 to 4 months. The solicitors will send each other different sort of documents and everything, land registry and all those kind of stuff that is going to happen. That is step number 4, and obviously you have to pay some money to the solicitors as well. And the last step number 5, is basically the completion. So what is going to happen is, when all the solicitors are agree, they're going to decide on a completion date, on what date you're going to basically get the property, when the keys are going to be exchanged, and it all happens through solicitors. So they're going to ask you to deposit the initial deposit to the solicitor's account. So basically you're going to pay all the money, like 30% deposit that you've got to your solicitor's account. And that is quite legal process, because when you hire the solicitors, they are legit, they have a proper company and everything, and they are legal. They have got legal obligations and all those kind of things. So it is not basically fraud or any kind of scam that can happen. So you're going to pay the money to them, and also your bank will also be in contact with those solicitors as well. So the bank is also going to deposit all the money, like the remaining amount of money that they agree that they are going to lend you, will be paying to the solicitors. Then what is going to happen, solicitors is going to deduct their fee, and obviously they are going to transfer the remaining amount to other solicitors, which are going to transfer the amount to the main owner, and then the completion happens, and then you can, at the completion date, you can get the keys, and this is how the whole process is done. So again, a person like me or any person who is to the UK, it is very, very difficult to get a property on the mortgage because of the condition which says that you have to get a 35% deposit, which is very, very large amount of money. So as I said, in London specifically, one bedroom flat can cost you as high as £400,000, and if you calculate 35%, that is £130,000, which is a lot of money, obviously. And in earning that money and saving that money is near to impossible. And also, if your salary is only around 40,000, 45,000 per annum as a combined salary, then obviously you're going to get only a loan of 160,000, which is like if you add them together, they only adds up to 230 or 240,000. So again, getting a property in London is next to impossible these days. It's very, very difficult now. But obviously, if you're living in Birmingham, Manchester, or any other place where the property prices are cheap and you're earning that much money, obviously you can get it. But in this video, I've explained the whole process so that my viewers get facilitate and they know what are the right steps. And if you've got the right money, if you've got the right amount of duration in the UK, for example, and you're looking for the property to buy, obviously I hope that in this video the steps I've mentioned are basically will be helpful. There might be a few questions as well. Please ask them in the comment section as well. One more thing I would like to discuss about the interest rate. So interest rate and how much money you have to pay depends on how long you want the mortgage for. You might want it for 20 years, 25 years, 15 years, 10 years. So the rate depends on that. So again, this is totally up to you. You need to figure it out. But in this video, I've explained what are the key steps. I'm just going to give you a summary. So first step is to actually look for a property. It might not be the one you want to buy. Second step is to get an AIP. The third step is to actually look for the property and presenting the AIP to the sales agent, and then getting a memorandum of sale. And then the fourth step is actually involve all the solicitors, paying the money to the solicitors, and also the bank is going to pay the money to the solicitors. And then the last step is the completion. So if you have any questions, do write them in the comment section. Thank you so much for watching my videos. Amir Hassan signing off.